Alright everyone, so in this video I wanted to talk about Questrade's biggest selling point, which is the margin power, which is basically leveraging your TFSA to increase the buying power in your margin account. So to read more about it in Questrade, simply go to self-directed investing, go to benefits, scroll down, go to margin power, click get details, and there you go. Boost your trading with margin power. So you have the power to increase your buying strength. It's called margin power and it's an exclusive to Questrade. Sadly, it's an exclusive to Questrade. No one else in Canada does it. So margin power connects the savings in your TFSA with the trading in your margin account. So what you get is the opportunity to enter new positions in your margin account. So trade without selling securities or transferring cash, increase potential profitability in your margin account. So they compare it to overdraft protection. You're basically using the equity in your TFSA as collateral towards your margin trading. So it's important to understand that if anything bad goes in your margin trading, they can actually start liquidating your TFSA positions. So that's the risk with it, but it does come with a big benefit, and I'm going to show you. So this is my margin account with Questrade. If we look at the individual columns, you can see that I've got 0 cash Canadian, 0 equity Canadian, but I've got 7,500 US cash. Yet my total buying power is 124,000 US. Now, how is that possible if I only have 7,000 cash in my margin account? So if I look at the individual lines here, my total buying power is 124 US, but my margin buying power is only 11,000. So that 11,000 comes from my cash. But because I already have positions in my margin account, I've used some of the maintenance excess, which is my buying power. So I only have 33.44 buying power available from my margin equity, which explains why my margin buying power is 11,000. So if you don't understand the difference between margin maintenance excess and margin buying power, watch my video called How to Use Margin Account with Questrade. I explained this difference, but basically, if you look up a stock, let's say Spotify, you see that there's something called long margin requirement, long MR, shows 30%. So that means if you wanted to buy this stock on margin, all you have to do is put up 30% cash and you can borrow the remaining 70%. That's what this means. So usually safe stocks will have 30%, but something like Tesla, although it just entered the S&P 500, actually has 40% margin requirement. So you have to put up more cash up front and you can borrow less. You can borrow 60% of it. Something like Snowflake has 50% long MR. So if you wanted to buy it on margin, you would have to put up 50% of it of your own cash and 50% you can borrow on margin, but of course you'd be paying interest on that. So the difference between maintenance excess, that's your cash buying power. If you were buying something only using your cash. And then margin buying power is if you actually wanted to borrow. You can spend up to in my case, I can spend up to $11,000, but I'd be paying interest, of course. So because I've got 7,587 in cash left, if I were to spend $11,000, the difference between 11 and 7 is what I'd be borrowing, and I'd be paying interest on that. Where did this 11,000 come from? Basically, by default, Questrade will assume that you're going to borrow on stocks that have 30% margin requirement. So the 3,300 here, the margin maintenance excess, represents 30% of the margin buying power. So if I take 3344.68 divided by 11,137.78, it should give me 30%. There you go, 30%. So that's where this 11,000 comes from. Now, of course, it's not recommended to use the full buying power that you have because you can get a margin call if the stock drops on you. If your positions drop on you, you should always leave some breathing room. But this is my buying power just from my margin account alone. But as you can see, there's a second line here called TFSA buying power. So this is the buying power that comes from linking my TFSA to my margin account, which is what Questrade calls margin power. Boost your trading with margin power. And that allows me to trade in this account, to trade in this margin account using the equity in my TFSA. So my total buying power in this account is now 124. So we looked at margin maintenance excess before for my margin account, which is only 33.44. But if you look at my TFSA maintenance excess, there's 8,200 Canadian and 34K US. So that gives me a total maintenance excess let's just say combined in US 43K, since in my case, most of my trading in my margin account is selling options on US stocks. So this is the number I really need to look at to know what is my true buying power when I sell options. If we look at my TFSA, I've got 2,100 Canadian cash, 24,000 US cash. Or let's look at the combined column. Let's look at the all in USD column. I've got 26K USD cash, 46K total equity, but my buying power or my maintenance excess is 25K. So where did this 40K come from? This TFSA maintenance excess 40K come from? If I look at my TFSA, I see the maintenance excess is 25K. So where did this 40K come from? So if I had all cash in my TFSA, then my maintenance excess in my TFSA would be exactly my cash amount. And if I go back to my margin account, this line here would show my cash amount in my TFSA as well. But in my TFSA, I've got some cash, 26K US, and I've got some equity or market value, which is 20K. So based on what I'm holding in my TFSA, the extra buying power I get in my margin account will be different. So in this case, the extra buying power that I'm getting in my margin account through my TFSA is 40K. And let me break that down for you. So basically, Questrade will take 70% of my market value, which is my equities, my positions, my stocks. So 70% of that. So 70% of 20,507.43. So 14K from my equities and then 26K cash. So that should give me my 40K. Let's see. I hope I'm not wrong. So that gives me 4719. If I go back to my margin account, I've got 4632. So close enough. But that's where the calculation comes from. Why 70%? Because if I'm holding in my TFSA stocks that have 30% margin requirement, then I can use 70% of my stock value as maintenance excess in my margin account. So market value is my equity, my stocks. But if my positions drop in value, then this number will drop in value. Therefore, my buying power in my margin account will drop in value as well. Because of this line here, this 40K will drop as well. Here's what I'm holding in my TFSA. I've got an AMD covered call. So AMD is a 30% margin requirement stock, as you can see here, 30%. I've got BABA, which is a 30% margin requirement stock as well. If nothing changed, 30%. Sometimes the margin requirement of a stock can change on you. Bell is a 30% Bank of Nova Scotia, Choice Properties, Gold, Manulife, MMP, Realty Income, Pizza Pizza. Actually, I'm not sure about Pizza Pizza. Let's look at Pizza. 30%. Okay, good. And RioCan, Smart Centers, AT&T, and TD. Let's just check TD. It should be 30%. 30% margin requirement. So all the positions in my TFSA, they're all 30% margin requirement stocks. Let's just check gold. It's an ETF, should be 30%. Sometimes it's 20%. So gold is 30% as well. So by holding 30% margin requirement stocks, that means I've got an additional 70% of that amount as buying power in my margin account. So let's just keep this simple. Let's say I had 100K in my TFSA. Let's say I had 100K cash and I link my TFSA to my margin account. That means I will have 100, and assuming I've got no cash in my margin account, no equity in my margin account, it's all zeros, but I've linked my TFSA to my margin account and I've got 100,000 in my TFSA all cash. That means my total maintenance excess in my margin account will be 100K as well. But it also means my buying power in my margin account will be 333,000. Why 333? It's basically this amount divided by 0.3 because this amount represents 30% of my total buying power, assuming I'm buying stocks that have 30% margin requirement. But if I'm actually buying ETFs like SPY, Q, or IWM that have 20% margin requirement, my total buying power in my margin account will actually be $500,000. But that's if I'm only buying ETFs that have 20% margin requirement stocks. So if you're buying shares, you could look at the buying power line because that's the buying power that is available to you to buy shares. But you'll be borrowing on interest if your cash line is below zero. So because you have zero cash, but you actually have buying power that comes from your TFSA that allows you to buy shares, you'll be able to buy the shares, but you're going to be paying interest because your cash line is empty. It's zero. So you're borrowing money from Questrade, so you're going to be paying interest on that. And your ability to borrow comes from the fact that you have equity in your TFSA. Now, here's why this is Questrade's biggest selling point. Because let's say I have $100,000 in my TFSA, and let's say I decide to buy TD stock. I put $100,000 in TD stock that pays me 5% dividends per year. So TD, great, safe Canadian bank, 30% margin requirement, and right now pays 4% dividend per year. So I can have 100K in my TFSA invested in a dividend stock, and at the same time, I will have $233,000 of buying power in my margin account. Buying power for shares that have 30% margin requirement. Because if I have $100,000 in my TFSA in a stock that is 30% margin requirement, like we saw before, that means the extra maintenance excess I'm getting in my margin account is 70% of that. So I'm going to have $70,000 of maintenance excess in my margin account. And if we convert maintenance excess to buying power to find out how much we can actually buy in shares of 30% margin requirement stock, we're going to divide that number by 30%. So that gives me $233,000. So that's the great selling point, is I could have 100K in my TFSA invested in something super safe, and I still have 70% of it as maintenance excess to trade with in my margin account, or 2.3 times buying power to buy shares of 30% margin requirement stocks. So in practical terms, in my margin account, what does that mean? What advantage does that give me? Well, it means that I don't have to have equity in my margin account. I could basically use my capital 2 times. I could use it in my TFSA, gaining tax-free. So whether it's capital gains or dividends, I could use 100K in my TFSA, making gains tax-free, and I can use 70% of it as extra buying power in my margin account. So that's like using your capital twice. Now, if you're going to be trading options, then you want to look at the maintenance excess line. So if you have 100K in your TFSA, all invested in a stock, then you will have 70K maintenance excess in your margin account that comes from your TFSA. So the margin maintenance excess line would be 0, but your TFSA maintenance excess line over here would be 70K, assuming the stock does not drop in value, assuming that the stock in your TFSA does not drop in value. And then with that 70K maintenance excess in your margin account, you can trade options with it, whether buying options or doing credit spreads or selling calls and puts. Now, if you wanted to buy shares, if you wanted to buy stock in your margin account, then you could look at the buying power line, which in that case, in the example that I gave you, if you have 100K in your TFSA invested in a stock that is 30% margin requirement, then you will have $233,000 of buying power in your margin account for stocks that have 30% margin requirement. Now, in my TFSA, if I had stocks that had 50% margin requirement, then I'm going to have less buying power in my margin account. So remember, I said if you have 100K in your TFSA, all cash, then you have 100K in your margin account as maintenance excess, which represents $333,000 buying power for shares or stocks of 30% margin requirement. If I have 100K in my TFSA in a stock that has 30% margin requirement, I've already used up 100K buying power, so I'm left with $233,000 of buying power, which I can use in my margin account, but I'll be paying interest on that for sure. So if I'm buying shares in my margin account, I've got $233,000 of buying power, but if I'm trading options, I have to look at the maintenance excess line, which is 30% of that, so it'll be around $70,000. Now, if I have 100,000 in my TFSA, but I bought a stock that is 50% margin requirement, then I am left with $50,000 of maintenance excess in my margin account. So I can trade in my margin account with $50,000, trade options, but I'll have buying power for shares in my margin account, depending on if I'm buying 30% margin requirement stocks. If I'm buying 30% margin requirement stocks, then I've got $166,000 of buying power for shares or stocks for 30% margin requirement stocks. But if I want to buy stocks that have 50% margin requirement, then I actually only have 100,000 of buying power in my margin account for stocks. So this might be a little confusing, but let's just summarize it. So to summarize, what you need to know is by using margin power, by linking your TFSA to your margin account, you're basically giving yourself extra buying power in your margin account. What you hold in your TFSA affects your buying power in your margin account. So what I mean by what you hold is if you're holding all cash, if you're holding stocks of 30% margin requirement, or if you're holding stocks of 50% margin requirement, that'll affect the impact of buying power you have in your margin account. The advantage is you can have zero equity in your margin account, and you can still trade in your margin account based on the equity in your TFSA. So that's the advantage. And so if you want to trade options in your margin account, you have to look at the maintenance excess line. If you want to trade stocks in your margin account, then you look at the buying power line. But of course, you'll be paying interest because you'll be borrowing money from Questrade. And always keep in mind the margin requirement of the stocks that you are trading in your TFSA and your margin. Because now that they are linked, it's like one big account. Now the risk, of course, is if you use all your buying power in your margin account and your positions drop, you'll be placed in a margin call. If you don't close your positions yourself, Questrade can close them for you. They can close them from the margin account or they can close them from the TFSA account. So going back to this point here, what you hold in your TFSA affects your buying power in your margin account. So in your TFSA, if you actually just buy calls, for example, long calls or long puts, then you will have no buying power in your margin account because that's not a stock. That's not a 30% margin requirement stock. You're actually buying a call that uses up all your cash, all your maintenance excess. You can't borrow against a long call or a long put. You can borrow against cash. You can borrow against a stock. But if your TFSA holds long calls or long puts, then it's not going to give you any extra buying power in your margin account. So the reason that I like margin power with Questrade is because I can have zero cash, zero equity in my margin account, and I can continue selling options in my margin account. Since the only trades I do in my margin account is selling options, it's great for me because I never borrow interest. For example, you can see that my maintenance excess is 43K US. Say I want to sell a naked put on Netflix. Say I want to sell a February 19 put. Let's say I want to sell, for example, I don't know, let's pick any strike here. Let's say I want to sell the 450. As you can see, the last traded price was $9. So I could put in an order for $9 to sell this put option on Netflix. As you can see, it's going to use the change in maintenance excess. It's going to use about $10,000 of my maintenance excess. Remember, we saw I had 43 total maintenance excess. So I've got room for this trade. I have enough capital to place this trade. But am I going to pay interest on this trade? No, because I'm not buying shares. I'm actually collecting money. This $900 is coming into my account. So it's actually going to increase my cash line, but it's going to decrease my maintenance excess line. And then once I close the trade, if the put option expires worthless, then my maintenance excess comes back and the 900 was already deposited. Nothing comes out of my cash account. I'm up $900. If I buy back this put option for, let's say, $400, then $400 is going to come out of my account, giving me a $500 profit. And then my maintenance excess is going to come back up again. So that's why I like this with Questrade, because I can leverage my TFSA's equity to actually sell options in my margin account and collect cash in my margin account, assuming that my trades are profitable. So if you found this a little bit confusing, rewatch the video, look at the examples, the examples I gave using the dollar values. See if you can calculate your own maintenance excess or extra buying power that you would get from your TFSA based on what you're holding in your TFSA. Also watch my video called How to Use Margin Account with Questrade. I think that's important to understand this video. But if you have any questions, leave them in the comment section below. I'll gladly answer them. And like always, if you're going to open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. Also, check out the other referral links below. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.